Hello and welcome. You're watching Money 9. I'm Sakshi Batra, and on this show, we talk all about markets and fundamentals and how are really experts looking at the markets currently. Where is the market really headed from here on? Which are the sectors and stocks that you should focus on and keep in your portfolio to give your portfolio a very healthy return from here on? All of this will be discussed with a very special guest who's joining in. I have with me Kranti Batini joining in from Wealth Mill Securities on this edition of Market Meter. Good afternoon, Mr. Batini, and thank you very much for taking out time for us on Money 9. It's great to have you back with us. Well, another day when the markets are trying and the bulls are trying to regain some of the lost ground of the previous three trading sessions. 0.5% uptick can actually be seen for the benchmark indices. But what is really, being the focus right now is the sectoral movement. We'll come on to that also, that how metal space and all of these spaces are clearly soaring and outshining the markets. But overall, the fear still remains that today is the expiry day. Perhaps we may not be again able to cross over those crucial resistance levels. Your take, sir?
Yes, actually, market has been finding a stiff resistance nearer to the 15,950 levels, and 16,000. We thought it can be possible. We can see a new high in the during this week, but it seems to be market is showing some kind of resistance because of the global factors and also some kind of selling that's coming from the FIAs on a regular basis. Even in fact, some hedge funds have entered into the market in last couple of months back. They have been trimming their portfolios because what they have witnessed is a tremendous profits in their positions. So uh, of late, what we are witnessing is some kind of profit booking at the higher levels. The foreign portfolio investors are booking at higher levels, and for the thing at the bottom levels, the domestic institutional investors are very active, coupled with the retail investors, and they are supplying, giving the required support to the market. So market is in a tight range bound that is leading the market to stay at a range bound mode, and also a lot of money what we are witnessing is going towards the primary market. That also one of the reason the secondary markets are a little bit choppy in the medium term.
Absolutely, sir. Taken all of those in, and let's now keep focus on the complete movement that we are seeing on the sectors, especially the metal sector. That's up 4.5%. So after a bit of consolidation, after a sharp run up, and a huge gap, again the metals are riding high. Several reasons also coming in. Some of those are news flows coming in from China and the kind of focus they are keeping on the exports of steel products. So all of that is also one thing. But what are the other reasons that are, completely pushing these metal spaces outside of the markets and, outperforming in the markets?
Sakshi, off late metal stocks are very active. Of course, they have been silent from quite a from past 3 4 weeks, and we have been here and there coming the news nowadays coming from China with respect to their technology stocks, and also now with respect to the metal stocks are concerned. Of
Yes.
course, whatever the news that's coming from China, it's a little bit positive to Indian markets, and today we have the advantage of metal stocks. They're taking the advantage of this news flows that's coming from China. But
Sure.
overall, if you have to analyze the metal as a sector, they are in cyclical in nature. They are coming out from a downtrend of the metal cycle. So we are quite optimistic and positive with respect to the metal sector is concerned, and also the cycle, the nature of the cycle is an uptrend. As the world growth is coming back on track, as inflation is becoming a worry, one of the sector that's going to take the benefit because of these reasons is the base metals stocks, and also the primary stocks. That is, metal will qualify for these segments, and that's the reason metal stocks are coming back again on the radar.
Hmm.
So investors, there is no need to hurry and jump to pick up these stocks. There will be market gives some opportunity, some dips. On the dips, they can accumulate for a longer term basis at every dip.
Absolutely. So that strategy is something that all the investors can keep in their mind in case they're focused on the metal space. We have to talk about the primary market action as well, because there are a whole host of companies which have opened up their IPOs. We still have Glenmark Life and Rolex Springs IPOs still open up, and the subscriptions are quite encouraging in the first 1 or 2 days that we have seen for both these IPOs. The new listing that has happened today has actually taken a lot of attention. Tatva Chintan IPO, the day debut has actually been quite blockbuster. We've seen 118% kind of a move over the issue price. And how are you seeing this space entirely, and what are you advising your clients and investors who are calling you up and wanting to take a pie of this, buzzing space, the IPO space?
Uh, Sakshi, what I perceive is it's the peak of the retail fringiness, okay, with respect to the primary markets are concerned. And the stock going at 100% return on a single day on the day of listing is it shows the fringiness in the IPO market. So my suggestion to the investor is very be careful. If you have the allotment, if you are lucky enough, okay, try to take some profits from the table. Of course, what we are witnessing is after retail the listing of the IPOs, after post 1 week or 4 5 days later, there will be a cool off with respect to the IPO demand and supply, bids and offer prices are concerned. So if you are getting lucky enough, get a good allotment, try to book some profit from the table, and you can re-enter the stock after the cool off is over. But what my suggestion to the investors is, be selective in be uh, don't be blind applying for all the IPOs. Be selective and try to be in the quality front. And I'm sure this is the time, a rejoicing time for the anchor investors and promoters and those people who are getting a IPO allotment.
Absolutely. And time now to discuss specific stocks that are from your portfolio that you always recommend to all our investors and viewers as well. Let's first talk about your star picks, those recommendations that you've given previously on our show, and those viewers who have actually been able to, implement on your advice and bought those stocks, the kind of returns that they have garnered so far, and the kind of future prospects that these companies still hold. Let's talk about Asian Energy first. Asian Energy, you had recommended earlier on our show, and the stock has actually shot up quite sharply in a very short period of time. About 63% of an upside has been seen. So congratulations on picking out this very early stock, and in a short period of time, this has given robust returns. Your take now, what should investors who acted on your advice, bought this share, do now?
Sakshi, Asian Energy is also a cyclical stock. It is there into oil and gas uh, seismic survey stock, uh, and the stock has delivered 60% returns from the time we advised on your show. So, because understanding the cyclicality of this sector and also the gains within a short span of time investors got by investing in this stock, they can book some profit from the table at this price range. Currently stock is trading at 135 rupees. They can take some profit from the table, and any dip that comes in the stock they can accumulate. The company is a zero debt company, and they works in a business where the 3D and 5D seismic survey for the oil companies. So it's a
Yeah.
very really high margin business. It depends upon the what kind of order book they carry. So at present, the seismic order book, the survey order book, is at a going at a very lower pace. But it all depends upon the crude oil, how the crude oil price is swinging. If the crude oil prices are going up, the companies will increase their capex with respect to the seismic survey activity is concerned. So the stock
Absolutely.
delivered a stellar return. Investors can try to book some profit from the table at this price range.
Okay, understood that. Another stock that you had recommended that has also managed to give peak returns of 60% again, that is KPIT Technology. Now we know throughout this year, the pandemic year, IT space has been clearly one of the big focus, and especially in the last 1.5 months, a whole lot of focus is actually coming on the mid cap IT space, which you have been talking to us about quite a lot. Several stocks you have discussed in this space, but KPIT Technologies especially has given very strong returns. So congratulations yet again. Your take now on the stock. What should investors do? Is there opportunity still to get invested in it?
Congratulations to the investors who are very much keen understanding our business models and investing in those stocks. And in fact, KPIT, we advised it to the investors on your show, Sakshi, on 22nd April. So within a span of 3 months, the stock delivered nearly 63% return to the investors. It's a strong stock, and as we have been kept on telling to the investors, in IT space, mid and small cap stocks are going to outperform, and KPIT Technologies is well positioned to take the advantage uh, in the space that is the automation auto sector is concerned. So,
Sure.
Sakshi, the stock to give the best returns in the days to come. So investors can add KPIT Technologies at every dip. The stock recently delivered a stellar returns with respect to their results are concerned. What we are foreseeing with respect to KPIT is concerned, going ahead, the automotive sector will require a lot of technology upgradation, and KPIT is in a best position to give be a part of the auto story. And also, what we are going to pursue in the coming years is we are going to see the auto sector and the four wheelers are going to become more intelligent.
Right. Okay, I think there's some technical glitch, but KPIT technology is still a buy on dips, as Mr. Batini really pointed out. Of course, it has gained about 60% right from the time that he had recommended this counter. And what he believes is that the auto story, this will be something that, KPIT technologies can still tap onto and be part of, because this is well placed a story, well placed a company that can build onto those gains that develop in the auto story going forward from here. Let's move on to see how the markets are really trading at this point in time, and we'll try and see if we can get connected again with Mr. Batini. So basically, the markets have been inching higher right from the first take, and at this point in time, if you see, the markets are trying to hold on to those crucial levels that they regained in the first half of trading session. For the Sensex, particularly, 160 points have been added. 52,605 is the current level. Also, let's see the Nifty 50. That's also trading with 0.5% gains at the moment, and Nifty is also above the 15,750 mark right now, comfortably above that with 72 points of a gain. What's also inching higher, slight a bit, is Nifty Bank also with the 1/10% higher at this point in time. Now, apart from this, if you actually see, the broader market indices are also inching higher, with the small caps definitely outperforming the entire market. 0.8% of sharp gains can actually be seen on this index. The mid cap index is 0.1% higher. So it's a broad based buying action that we are seeing. Let's now get Mr. Patini back. He's back with us. Mr. Patini, you were talking about KPIT Technologies, and you have advised all the viewers who are looking to buy afresh that they can still look at declines to add on to this stock and buy on declines, because the strong story is still to be unfolded, and KPIT Technology is well placed to actually build onto the auto growth story as well. Let's now move on to understanding your specific recommendation for the day, a new recommendation that you'd like to share with all our viewers today.
It's actually the new advice for the investors for this week is Bharat Seeds. It is an
Okay.
associate company of Maruti where Maruti holds 14% and Suzuki Corporation holds 14%. Altogether, the pedigree of Maruti is there in Bharat Seeds. It's an associate company, and one of the promoter is the Rane Group. They hold a strong stake in this company. So it is a very undervalued company. Bharat Seeds is 100% supplier for seats supplier for Maruti Suzuki is limited. So
Yeah.
uh, the technology transfer has been done, and Maruti directors on the board of Bharat Seeds. It gives a comfort to the investors with respect to their corporate governance is concerned. And also the stock is undervalued, and the market capitalization is just less than 150 crores. Investors with a long-term horizon, those who want to take part of the growth story of autos, Bharat sits in a best position to take the advantage of growth in uh, Maruti and the auto sector is concerned.
Okay.
In next couple of quarters, we will see a robust growth with respect to autos are concerned, and Bharat Seeds can take the advantage of this growth story. So investors with a horizon of 1 year can invest and buy this stock at every dip to take the advantage of auto story is concerned.
Absolutely. So Bharat Seeds, an auto ancillary company that you can invest in. It has a lot of positives with respect to the kind of pedigree that Maruti has. And apart from this, the auto sector growth story that is likely to get unfolded. And you can stay invested in this stock for a horizon of 1 year with a 25% potential upside that Mr. Patini really looks here. Thank you very much, Mr. Patini, for sharing your insights on the markets and these recommendations with all our viewers. I'm sure these are really going to benefit them in choosing and selecting stocks that are better for their portfolio. Thank you.
Thank you, Sakshi. Always pleasure is mine.
Okay, thanks a lot. Let's move on to see how the markets are really performing when you talk about the sectors, especially. As far as the sectoral movements are concerned, there is a divided trade, but clearly one sector outshines, and that is the metal sector. 4.4% of an upside being seen here. Apart from this, it's the IT space that is buzzing in trade. Over a percent uptick can be seen. Realty is catching up too. Over a percent gains can be seen here. And media stocks, and apart from that, it's the financial services and PSU banks that are still holding up. The private banks are actually declining, so it's a mixed trade as far as the Nifty Bank is concerned. And apart from that, if you see, it's the FMCG stocks that are actually declining in trade. 0.7% of a decline can actually be seen in this sector. Apart from this, let's see quickly Nifty 50 gainers and losers. How are they stacked up at this point in time? The top 50 Nifty gainers, if you see, are from the metal space. No surprises there. Hindalco, Tata Steel, JSW Steel, all upwards of 3.5%. Look at Hindalco. The strong up move of over 9% can be seen on this stock. That's a very sharp move, and there is no sign of abating here. Bajaj Finserv is back into action, 3.5% uptick right there, and Tata Motors 2.5% at 291 rupees is still holding up strong. As far as the laggards are concerned, let's look there too. Maruti Suzuki continues to decline, but still holds that 7,000 mark. Cipla also is down in trade. FMCG is down, especially Nestle after the earnings is down almost 1% in trade. Power Grid, now there is some news over there as well of the stock turning X bonus. So all of those is playing out on the Power Grid stock as well, 1.3% downtick. And NTPC is tracking the entire sector now, right now, 0.9% of a downtick can actually be seen here. Overall, the markets are still divided in trade, but the breadth favors the advances at this point in time. But remember, it's the expiry day, and the last 2.5 hours will be extremely key to watch as to how do we see the July series really closing in today. Apart from this, what should your strategy be? How will the next series really pan out? All of this will be our focus, and we'll keep you posted on all of this. And for that, you need to like and subscribe to our YouTube channel. Hit that bell icon so that you can get notified whenever we add a new video, and stay connected with us through all our social media platforms and on our website. Thanks for tuning in.